Hey, welcome back to Lunch at the Market. Pretty hideous day out there. Dow's getting whacked by, I don't know, 160, 180, depends on the minute. But not all is lost. We actually nailed Frontline yesterday, which is not bad. Try to get this video out earlier to you. Hopefully you caught Lunch at the Market from stockpicker.com. Frontline was up close to $2, almost 8%. At one point, it was over 8% that it was up. We'll check on it right now to see what it's trading at real time. Not that it will be real time when you see this, but yeah, it's trading right around that level, right? It's up $1.96 or about 7.8%. We are looking for somewhere closer to 30. So for a longer term trade, it really hasn't hit our price target. But if you got in on Lunch of the Market and you're a trader and you bought it on our recommendation, please, by all means, you're welcome. Take the 8% game, go home, go buy a sweater. It's that kind of market right now that you probably want to be quicker rather than slower to take your gains. But it's not bad to have it stock up 8% on a day today, when the Nasdaq's down 2.5 and the S&P is down 1.7 and the Dow's down 1.3. So that worked out well. Dow 12,000 and S&P 1300 are probably going to act as pretty good resistance at this point. The indexes basically failed at those levels, and so you're going to see S&P 1300 act as resistance and Dow 12,000 act as resistance. We'll see how long it takes to get back above there. The Dow is safely backed off of that. The Dow's trading at 11,817. So we've got, almost 200 points to go before we get back up there, and it's probably going to be a little while. Egypt doesn't look like it's going to stop anytime soon, and after seeing Jim Cramer on Stop Trading, it looks like Egypt has been a place of concern for him for some time now. But having cash on hand, right, we've been telling you guys to sell. We've been getting smaller, take positions off the table, less risk. Also that we can be opportunistic when days like this happen. We got an email alert this morning that iGTE is finally fell below $15 a share, and that was our buy level, right? We waited patiently while the stock traded all the way up to 25, and now we have an opportunity to get into IGTE below $15 a share, which is where we identified where we wanted our entry point. They're in the same sector as Infosys, so they're probably down somewhat in kind of sympathy, right, with Infosys. They got whacked on their quarter. IGT is down 4% today. It is trading up a little bit above that. We got in at $14.75. It's trading about $14.88 right now, but still sub $15. We like it. The stock trades, the PE, forward PE is only 12.2. The PEG is 0.71. Profit and operating margins are 18%. They have $139.8 million in cash and $0 in debt. Comes out to about $2.48 a share in cash. Not bad at all. They've got they provide outsourcing solutions, right? And they do it on a business outcome based pricing model, right? So your pricing is based on the outcome of what they do for you. Not so bad. They do IT consulting, application development maintenance, data warehousing, data mining, business intelligence, ERP systems, infrastructure management, data and solution testing and verification, right? So if you've got data, you arrived at a conclusion through some results, right? They can independently verify that data for you. So it's a really essential sector, especially as the economies of the world move to this kind of knowledge-based economy, right? More services, less physical goods. This California company operates in 16 countries: Mexico, Canada, Singapore, Malaysia, Japan, Australia, India, and they operate in Europe as well. They are all over the world, so it's probably pretty easy for them to do business. They've got they're trading down, one, in sympathy with Infosys, and then two, the whole market's getting whacked today. So we think it's a good day to pick it up. It's clean balance sheet, well-run company, been around for a while, and it's in a good sector. Now, keep in mind, Infosys, the good is Infosys trades with a PE of 22 and a PEG of 1.4. So they have half the PEG and close to half the PE. Okay. The negatives are Infosys has $6.24 a share in cash, and their margins are 25% versus IGTE's 18% margins. But we do like the name. It's probably off most people's radars, which is why we really like it. Volume today is only 591,000 shares, And let me check real quick to see what Infosys trades. Infosys daily volume as of today are 1.5 million shares. So about a third of the volume that Infosys does, but it also means that, right, these small cap names are where you can get the most bang for your buck. M&A is a story that has been told throughout the year, and they can get a bid a whole lot easier than an Infosys can get a bid. And if somebody wanted to acquire more names in the service industry, IGTE or iGate is an easier acquisition than an Infosys, so they'd be a takeover target, especially with the attractive valuation and extremely clean balance sheet. Anyway, take a look at IGTE. That's our new name for today. We did dip our toe in there again at 14.75. Next, Frontline. That worked out okay. Like I said before, if you're a trader, take the 8% gain. Congratulations, you're welcome. Go buy yourself a sweater. If you're not, our price target is the 30s. Next, Netflix, Salesforce.com, and SourceFire. They're all actually up today. It's amazing. Kind of like the Equinix quarter, in which EQIX got obliterated on a miss. Names like F5, right? In fact, the Fast Money Desk now calls that kind of reaction an F5, right? You got F5. Well, F5 is down only about 1% today, and Akamai is down less than 1% today, and then all the other names, Netflix, Salesforce.com, and Fire, are all actually green today on a pretty bad-looking tape. Okay, so the cloud, once again, did not burst, and those kind of massive declines are usually buying opportunities. It certainly was in Equinix, even if the company is less well-run than some of its competitors in the same space. So be on the lookout when those cloud names get beat up pretty badly. It's usually an opportunity. In terms of Netflix, we added those short 185 put spreads on top of the long 175, right, on that part of the put tree. Amazon today got whacked, and so we sold the top part of that put tree off, and then sold some 160, 155 put spreads in Amazon. Amazon seems to be holding that 170 level pretty fiercely. It's dipped below it on several occasions today, but here I am again, pretty close to the lows of the day, close to the end of the trading session, and Amazon is still above 170. So we like being short there at 160, 155. Starting Monday, there's only 3 weeks until expiration, and so if you're a buyer, if you're on the other side of that trade, you're running out of time to be right, and with time on our side, we're usually a seller of option spread. Hope that helps. Hope the trade repair helps. Just don't panic. Keep your position small. We may see some more selling next week, depending on what happens this weekend. They're certainly playing the footage over and over again on business television, on CNBC. So I'm sure that'll hit the newspapers, and that'll get investor sentiment down. But that's probably helpful to resolve some of the overbought oscillators, and that's another good thing that can come out of a day like today, is it can really help resolve some of that. Markets can't go up in a straight line, or then they usually go down on the other side of a parabola, right? When stocks go parabolic, that's bad. At least gold's getting a bid, right? There's another positive that came out of today. So thanks for tuning in again today. Have a great weekend. If you can, stay out of that area of the world. There's a lot of unrest out there. Be safe, and we'll see you on Monday.